If you wear glasses or contact lenses, you are part of a massive global statistic. Billions of people around the world suffer from myopia or nearsightedness. For decades, the solution was simple. Wear a lens on your eye, or use a laser to burn away part of your cornea, known as LASIK. But what if there was a third way? A way that doesn't involve removing tissue, offers better night vision, and is completely reversible? Today, we are diving deep into STAAR Surgical, ticker symbol STAA. We are going to analyze their financial journey from 2020 to the critical data points of late 2025. We will uncover why their EVO Implantable Collamer Lens is disrupting the refractive industry, and why their recent performance in the US and Asian markets signals a potential long-term growth story that many investors are overlooking. To understand the future of this company, we first have to understand the technology. Unlike LASIK, which subtracts tissue from the eye, the EVO ICL is additive. It is a soft, flexible lens implanted between the iris and the natural lens. This is a crucial distinction in a world where consumers are increasingly health-conscious and wary of irreversible medical procedures. An upgradable solution has a massive psychological advantage. The annual reports from 2020 to 2024 show a clear trend. The refractive market is shifting towards lens-based solutions. Let's look at the financial foundation. Back in 2020 and 2021, STAAR was a high-growth darling benefiting from the post-pandemic boom in elective procedures. But the real pivotal moment came in March 2022, when the FDA approved the EVO lens for the US market. This was the catalyst that opened up the largest premium healthcare market in the world. The 2023 and 2024 annual reports reflect the heavy investment required to launch this product sales force expansion, marketing to surgeons, and direct-to-consumer campaigns featuring celebrities like Joe Jonas. Now, fast forward to the 2025 financial data. The first 3 quarters of 2025 tell a story of resilience in a mixed macroeconomic environment. Let's break down the Q3 2025 10Q report. The company has faced significant headwinds in China, which has historically been their largest market. Economic softness in Asia impacted high-ticket elective surgeries. However, the data reveals a crucial offset: the United States. In 2025, we saw U.S. sales accelerate, proving that the adoption curve for EVO is gaining traction among American surgeons. This geographic diversification is key. They are no longer just a China play. They are becoming a balanced global entity. Let's analyze the margins. STAAR Surgical operates with a gross margin profile that is the envy of the medical device industry, consistently hovering in the high 70% range. In the 2025 reports, despite inflationary pressures and currency fluctuations, they protected these margins. This indicates pricing power. Patients are willing to pay a premium for the EVO lens because it offers a superior visual outcome. High gross margins give the company the firepower to invest in R&D and marketing without burning through cash excessively. Speaking of cash, the balance sheet remains a fortress. Throughout 2025, the company maintained a strong cash position with 0 debt. In an era of high interest rates, not having to service debt is a massive competitive advantage. It allows them to navigate downturns and potentially look for strategic acquisitions to broaden their portfolio. But the most exciting part of the thesis is the myopia epidemic. By 2050, it is estimated that half of the world's population will be myopic. This is not just a market, it is a demographic tidal wave. STAAR is positioning itself as the primary solution for this growing population. In 2025, they continued to roll out new iterations of their lenses, expanding the range of treatable vision prescriptions. They are not just treating high myopia anymore. They are moving into the moderate myopia market, which multiplies their addressable market size by a factor of 10. We must also look at the competitive landscape. While Alcon and Johnson & Johnson dominate the cataract market, the phakic IOL market lenses for people who still have their natural lens is dominated by STAAR. They have a massive first-mover advantage and a patent estate that makes it difficult for competitors to replicate their specific material, Collamer. This material is biocompatible and does not cause inflammation, a secret sauce that has taken decades to perfect. So, what is the verdict for the long-term investor? The volatility we saw in the stock price during 2024 and early 2025 reflects the market's anxiety over China's growth rate. But if you look at the underlying data, the unit volume growth, the stable margins, and the untapped penetration in the US and Europe, the fundamentals are stronger than the sentiment. STAAR Surgical is transitioning from a niche product company to a standard of care provider. As awareness of the removable vision correction option grows, STAAR is poised to capture a significant share of the billions spent annually on glasses and contacts. In conclusion, the journey from 2020 to late 2025 shows a company that has successfully navigated regulatory hurdles and macroeconomic storms. They have a product that fits the modern consumers' desire for reversibility and high performance. For investors willing to look past short-term geographic noise, STAAR represents a pure-play bet on the future of human vision.